Welcome to another edition of Inside the Economy. I'm Larry Howes. Thanks for joining me. I'm going to talk about the tariffs. It's an interesting topic these days. The S&P 500. And some questions about immigration and trade issues that it's a curiosity whether it's media hype or there really is something going on here. Quick look at the numbers. Big bump in durable goods. And we talked a while ago how Vietnam was probably the first in the door to renegotiate on their tariffs, and they were fairly successful. I think they ordered about 50 Boeings last week, which is a big piece of the durable goods orders. No drama in initial jobless claims. We're still at 4.2 unemployment. However, all the interest rates except for mortgages went up. Everything else went down. Everything went down. Interesting, and sort of anticipating that there's rumors the Fed might lower rates. I tell you, June, not before that. There's probably a 40% chance they'll lower rates in June. Maybe. It won't be significant, but it'll be a good time to wrap up some positive news on tariffs, as well as bump the market up a little bit. They'll be due about then. But if you look back on the fundamentals of the economy anyway, the labor market is not bad. The hiring rate has slowed significantly. The layoff rate has not gone up. It's not like the U.S. manufacturing is getting rid of everybody because they're shutting down. No, it's not. They are adjusting. Anybody who wanted a job has had a job for a while. That's part of the unemployment number. And a lot of the new hires, where they're going, well, that slowed because we're going to see what activity is going to do. And I'll tell you right now, activity is going to slow. I've mentioned before that one of the places you can look at is income tax receipts, and here's 2025. It's not bad. It has not fallen apart, thinking the IRS is going to disappear or whatever reason. This is just non-withheld taxes, and it's pretty standard compared to the last few years. The housing market, the red is 2025, the blue is 2024. This is not a market that's falling apart. This is not a market that's outpriced. There's not any drama in there. Even when the rates go up, sales are still happening. That market is solidifying. There were some new monies collected, some customs duties. We got up to about $15 billion, basically postage money for the government, but it is a step up in income. Well, it won't have a big impact. It's certainly not going to have any impact on our deficit spending, but it'll be part of the discussion how long they stay. I've jumped out and said most of the tariff discussions are going to be resolved by the end of June. This is not going to go on and on and on, with the exception probably of China, but everybody else is going to work out a deal and get out of this. So this is going to go down. And the fear of built-in ongoing inflation will probably go down with it. The S&P 500 has sort of recovered back to where it was about a year ago. And given the earnings of the S&P 500, that's about right. We're still a tiny bit oversold right now. It will probably work itself out. Again, you can tell there isn't a bubble that needs to be corrected here. And when the GDP numbers come out for the first quarter, I've mentioned before, it's probably going to be negative 2.5. Media is going to go berserk, which is fine. I don't think Secretary of Treasury is going to care. We know where the numbers are. Spending has slowed. Spending is going to slow. If you look back at consumer spending even the last 10 years, there was a lot of stuff bought from China, low-end stuff, $30 shoes, which are now $50 shoes now, and the sales are going to go down. A lot of the stuff that just looked cheap and, oh, I need that, that's going to go down. You might want to think about how much of the stuff low-end stuff you've probably bought just from China in the last 15 years that's in the landfill. It's generally not durable goods. So what we're going to see is, yeah, U.S. industry, revenues are fine. Healthcare, doing well in revenues. Tech as you might imagine. What isn't doing real well are industrials. They are adjusting. They're not hiring quite as much. Their sales have slowed. A lot of things have slowed. It's not because of high rates, not because of anything. It's the consumer is adjusting for the frenzy that we've had the last decade. It's coming to a halt. Gold is a great indicator for this kind of stuff. It has gone way up in anticipation, not only of the inflation we picked up for the money in the system for COVID, which I've mentioned before, probably the right thing to do, but the speculation that inflation is going to pick up because of all these dreadful tariffs, it's not even 50-50 chance that it will. Inflation will probably wane a little more, even if they lower rates in June. That's not going to have a huge impact because you really don't have a problem other than if you want the consumer to buy more. And just slightly cheaper money is not going to stimulate it that much. It'll be a market move and a piece of PR. Manufacturing is doing fine. It's popped up a little bit in anticipation of tariffs coming in. There's been some things put together and shipped to get them out before they adjust to the new, what I'm thinking is a short-term regime here right now. But it's certainly not fallen apart. Big question about, gee, we used to have a lot of short T-bills out there for sale. And now Secretary Bissett is saying, well, we're going to emphasize selling long bonds, 20, 30-year bonds, because that's, the thing to do. Well, okay, maybe or maybe not. The previous administrations have really had an emphasis on short-term bills, T-bills, year or less, or 6 months or less, because they had so much reserves in banks after COVID. Banks had so much cash available to lend that's all short-term bonds. It wasn't a bad financial move on their part. It was just going with the times. They are going to start shortening that a little bit and try to sell more long. It doesn't really matter much. That's just how they manage the yield curve on bills. But it certainly isn't a political issue. A couple of questions, interesting enough, is there really an immigrant problem? I guess that depends on who you ask. I know that's a hot topic out there right now. But in the last couple of years, there have been huge numbers of asylum or refugee or whatever it is, people brought in for whatever reason by the various administrations. Fine. Well, I think this administration is going to kind of go back to where it was a decade ago. It's simply a matter of dealing with the numbers, and it's kind of a political issue. It's really not an economic one. A couple of questions on, is the United States really that important to China? China says we're not. They're going to happy to do whatever it is they do elsewhere. Well, don't believe it. You look here. Yes, China trades a lot with South Korea and Japan and Vietnam and their intermediary partners, so on and so forth. And the rest of the world is there on the left. Everybody else is over there. Small time. All the way out there, a little past 14%, is the United States. Don't believe for a minute that the United States isn't a critically important customer to China. It is. Money, their dollars, their ability to buy food and energy comes from the U.S. It's a big deal. It's not going to be simply written off. There we are. That's enough for now. There isn't anything else going on in the marketplace that's really dramatic. The S&P 500 is not going to fall apart. The bond market is going to start doing real well because people are buying bonds thinking rates are going to come down. Okay, it's fine. As always, send questions along to info@SHJ Wealth Advisors. I'm happy to deal with it. And thanks for joining me.